Welcome in this video. Xcn coin breakthrough has arrived. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The descending wedge pattern that I analyzed and showed you in detail in the previous video is still valid. As we mentioned in our comments at the time, such descending wedges are usually considered as a reversal pattern in technical analysis and often result in upside breakouts. As a matter of fact, in line with our expectation, the price has broken this descending wedge pattern upwards. At the moment, as a noteworthy development, we see that the price is pulling back towards this broken wedge pattern and performing a retest process there. This retest is considered an extremely healthy development in technical analysis, because many times, when a support or resistance zone is broken, the price will go back and confirm that is retest, which will pave the way for the subsequent price movement to be more robust and permanent. This is exactly what we are seeing right now. The price has retraced back to the upper band of the descending wedge pattern, where we expect buyers to re-engage. To understand this more clearly, let's look a little deeper. Descending wedges form a bearishly narrowing price squeeze and usually indicate that sellers are starting to lose strength. This means that each new low is less severe than the previous one. This implies that sellers are getting tired and buyers are slowly gaining strength. When the price breaks out of this wedge to the upside, it shows that this psychological shift is now reflected on the charts. The current retest process is also critical for the permanence of this breakout. If the price finds strong support during this retest and starts to move up again, this would confirm that buyers are now completely dominating the market. In such a scenario, a strong uptrend could begin, not only in the short term, but also in the medium term. It is also very important to keep an eye on the candlestick patterns that will form during this retest. In particular, pin bars, engulfing patterns, or high-volume green candles with strong buy signals may confirm that the price will rebound strongly from this support and start accelerating upwards. This could be a critical opportunity phase for patient traders. To summarize, the descending wedge pattern, which we examined in detail in the previous video, has broken upwards as we expected in technical terms. At the moment, there is a classic retest process that will be the subject of textbooks. If this retest process is successfully completed and the price accelerates upwards again, it will be possible to see much higher levels in the coming days. So it is very important to watch carefully the reaction of the price at this support line in the next few hours or few days. But we need to look not only at one metric, but also at other metrics. Keep watching. When we look at the current chart more carefully and from a broader perspective, we can clearly understand that the broken pattern shows us specific targets. Especially in technical analysis, the first target after a pattern breakout is usually the important Fibonacci levels. We have a similar situation here. Currently, the price is first trying to reach the Fibonacci 0,382 level after the breakout of the pattern. However, this level alone should not be seen as an ultimate target, because once the price reaches the 0,382 level and gathers strength there for a while, it may break the 0,382 level to the upside and continue its move if the buyers are dominant enough and there is a positive sentiment across the market. In such a scenario, the Fibonacci 0,618 level is the next major target zone. Since the 0,618 level is the so-called golden ratio in the Fibonacci sequence and is considered a very important psychological and technical resistance zone in the markets, the rise up to this level can be extremely critical and powerful. If the price finds strong volume support and consecutive high momentum candles while breaking the 0,382 level, this will create more confidence among traders and accelerate the rise towards the 0,618 level. In such movements, we also often see sudden and steep rises. This is because many traders prefer to open new long positions after the break of the 0,382 level, which leads to a significant increase in demand. Especially given the structure of the broken pattern and the general market trend, we can predict that the 0,618 level will act not only as a possible target, but also as a level that attracts the price like a powerful magnet. Of course, another important point to note here will be the behavior of the price when it reaches 0,618. If it meets significant resistance at 0,618, it may be possible to see a correction or a small consolidation movement here. However, if the 0,618 level is breached with high volume buying, it could also mean the beginning of a much bigger and lasting bull run. In short, to summarize, the Fibonacci 0,382 level is an important barrier to overcome in the first place after the pattern breakout. In case of a clear break of this level, we need to turn our eyes directly to the Fibonacci 0,618 level, because this level is extremely critical, both from a technical point of view and from an investor psychology point of view, and will give us important clues about the future direction of the price. All these developments at the moment indicate that the market dynamics are starting to turn in favor of buyers. If we do not see a change in the general trend and external factors continue to support it, it is worth considering that this move up to 0,618 may be just the beginning. For this reason, it will be necessary to follow very closely the price movements in the coming period and especially the price reactions that will occur at Fibonacci levels. You see how it previously reacted downward from 0,382. When we focus on the MACD indicator, we can easily observe that an important development is currently taking shape at a very critical level. In particular, very close to the zero line, there is an upward crossover between the MACD line and the signal line. In technical analysis, the MACD is one of the most frequently used and trusted tools for capturing trend changes and momentum shifts. For this reason, a cross so close to the zero level is considered much more important. The zero line is like a boundary line for the MACD. Above it, the overall trend is considered positive, while below it, the overall trend is considered negative. At the moment, the MACD line has crossed the signal line to the upside, and the fact that this crossing is occurring just above or around the zero line may signal the beginning of a possible trend reversal. This type of crossover has often resulted in significant acceleration in price action in the past. When we see such a pattern on the MACD, we get two important signals. First, we understand that market momentum has turned positive compared to negative. The second is the expectation that the current price action is not just a short-term correction, but could turn into a larger-scale uptrend. At this point, not only the MACD line needs to cross up, but also the histogram bars need to start crossing up and expanding into positive territory. If these developments occur together, they could put significant upward pressure on the price. At the moment, the MACD crossing at the zero level is not only a signal of a technical turnaround, but also a sign of a major shift in the psychological mood of the market. Especially in a market environment where investors are starting to gain confidence, seeing an upside crossover on a strong technical indicator like the MACD may cause buyers to return to the market more boldly. This could trigger the start of a new rally, supported by increased volume. Looking at previous price action, we have repeatedly observed that similar MACD crosses have been followed by significant price rallies. History clearly shows that crosses just above zero are the harbingers of fast and strong upward movements in prices. Therefore, this technical development should not be underestimated. In order for this cross to turn into an effective uptrend, it is important to pay attention to a few conditions. First, the MACD needs to be able to stay firmly above zero. If the difference between the MACD line and the signal line widens, and the histogram bars become stronger, this confirms that there is a strong momentum to support the upward movement of the price. Also, if there are pattern breakouts or important resistance crossovers on the price chart that support this move, the bullish movement gains a much firmer footing. The MACD crossover can sometimes be the scene of short-term pitfalls. Therefore, it may not be right to rush into a decision based on the MACD alone. However, in the current situation, the fact that both the technical structure of the price supports it and the general market psychology is starting to recover makes it less likely that this crossover is fake. Still, being cautious and waiting for confirmation would be a wise move in terms of risk management. To summarize, this upside cross in the MACD indicator shows us that not only the current market movements are short-term, but they may also change in the medium and long-term perspective. If this crossover continues with the increase in volume and the price breaking the resistances, we could see a very strong uptrend in the coming period. For this reason, both MACD lines, histogram development, and the general movements of the price should be carefully monitored in the coming days, because a rally that may occur can offer investors serious opportunities if it is caught in the initial phase. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.